Boom shakalaka. Boom shakalaka. Hi, my name is Rayner. Pleased to meet you. Alright, stop messing around. So, in this section, right, you will learn number one, what is technical analysis, what is market structure, what is an area of value, what is an entry trigger, and more importantly, how do you use technical analysis in your trading. So let's get started. So first thing first, what is technical analysis? So I define technical analysis as using past data to help you make your trading decisions. And this past data could be things like volume, indicators, chart patterns, candlestick patterns, etc. And of course, right, technical analysis is not the only way to trade the markets, because you also have things like fundamental analysis, sentiment analysis. But me, primarily, I'm a technical trader. So this is why in this video, I would focus more on technical analysis. And I want to share with you the 3 things, right, that you should focus on, right, when you kickstart this trading career of yours. So technical analysis, right, I would say there are 3 components which is very important to master. The first component here is what I call market structure. So here's the thing, right, when you look at the price chart, the first thing that comes to your mind should be, should I be buying? Should I be selling? Or should I stay out of the markets? That's really the first thing that should come to your mind. You shouldn't, look at the chart and say, oh, let me buy now. Oh, let me sell now. No, you should first ask yourself, is this the type of price action? Is this chart telling me that I should be looking for buying opportunities or selling opportunities? Or maybe I should stay out completely of this market? This is the first question, right, that you must answer. And everything else, right, is secondary. So the way to do that, right, is market structure helps you to answer this question. It tells you what to do. So market structure helps you to define the current market condition, so you know whether to be buying, selling, or staying out of the market. So let's dive a little bit deeper into market structure. So market structure, there are different types of market structure, but for this video, I will share with you 3 broad categories of market structure. Number 1 being an uptrend. If you know a market is in an uptrend, not necessarily stock, can be currency pairs, etc. You want to look for buying opportunities. So let me explain to you what an uptrend is. So in the grand scheme of things, an uptrend forms a series of higher highs and higher lows. So it looks something like this. Market goes up, but as you know, market doesn't go up in one straight line. It goes up, it needs to take a breather, it needs to pause, and then it makes a pullback. Then once the pullback ends, it will continue up higher, breaking above this previous swing high, this previous high if you want to call it. Then it goes up again, it doesn't go up in one straight line, it needs to take a breather, pause. Once it rests, finish, and then it continues up higher, breaking out above the previous swing high again, and then the pattern repeat itself. So when you look at this, you will notice that an uptrend consists of a series of higher highs and higher low. Look at this high, another higher high, I'll cluster this as 1, and another higher high. If you look at the lows, it's a higher low, higher low, higher low. Okay, had to do that. So this is what I mean by an uptrend, a series of higher highs and higher lows. And if you see a market has this market structure, this currency pair has this market structure, then what do you want to do? Well, you want to look for buying opportunities, because the market is in an uptrend. The path of least resistance is higher. So this is why you want to be looking for buying opportunities. So if you see a chart that looks like this, tell yourself, promise me, you will only look for buying opportunities, right? You don't want to look for selling opportunities. Not that it can't be done. There are traders who specialize in counter trend trading, but for you, the beginner, it's much easier to be trading along the path of least resistance, trading in the direction of the trend, than against it. Okay, so uptrend, look for buying opportunities. Next one, downtrend. This is just the reverse. You want to look for selling opportunities. So downtrend, right, in essence, is a series of lower highs and lower lows. So market heads down lower, makes a pullback, heads down lower again, breaking below the previous low, makes a pullback, heads down lower, breaking the previous low. Sometimes it could consolidate and then break down lower, once again breaking below the previous swing low. So if you look at it, you will notice a series of lower high, lower high, lower high, and lower low, lower low, lower low. So if you see a market is in a downtrend, then what should you be doing? Buying or selling? Well, the path of least resistance is towards the downside. So promise me, when you see a chart that's in a downtrend, you only think of selling opportunities. Okay, that's the path of least resistance. And finally, you have what we call a range market. And in this market condition, you can be both a buyer or seller. So a range market looks something like this. Price is contained between the highs and the lows. So when a market is in a range, right, you can look for both buying and selling opportunity. And one thing to point out is, again, how do you know a market is in range is where you see the highs of the range, right? The price just keep testing it, right, but unable to break out higher. Compared to an uptrend, the price is able to break above the previous swing high. It's able to break above the highs. But in the range, it's just, getting rejected at the highs consistently over here. Same for the lows of the range. It just cannot break down lower. It's just, you know, contained above the lows of the range. So you can think like the price, right, is being trapped like in a big giant box, just can't get out of it. So with that said, let's have a look at a few chart examples so you know how this looks like. Because one thing to know is the theory is one thing, but when you look at the live charts, the market, it can look completely different, out of whack. Like one is in heaven and one is on earth, so it's going to be quite different. So I want to walk through with you, right, when you look at the chart. So if you look at this chart, New Zealand against the Swiss franc, this is the daily time frame, as you can see over here on the daily chart. What market structure is this? Well, if you notice this market, in the grand scheme of things, is forming a series of higher highs and higher lows. Higher high, higher high, higher high, higher high, higher high, and higher low, higher low, higher low, higher low, higher low. There's another minor one over here, okay? So yeah, so you can see that in the grand scheme of things, in the big picture, if you look from left to right, this market is heading higher. It's in a uptrend. And if a currency pair, if a market is in an uptrend, what should you be doing? Looking for buying opportunities or selling opportunities? I'm sure you got the answer. Okay, so let's have a look at another one. Dollar against Canadian. Okay, so if you look at this again, this pair, just identify the highs and lows on the chart. This is the highs, the highs, the highs, 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 the highs, the highs, and the low. The low, 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 and low. So you look from left to right, where is this currency pair heading over time? It's heading down lower. So in other words, you can say that the US dollar is depreciating against the Canadian dollar over, over the last number of months over here that you see at the bottom. Okay, so this is in the downtrend. And one thing to also share is that when you look at a chart, right, there are many swing points. What I call a swing point is the highs and lows on a chart that kind of stick out like a sore thumb, which is very obvious. Like, this is a swing high, this is a swing high. I won't consider this a swing high because this isn't as obvious. This isn't as in your face kind of thing. So when you want to identify the series of higher highs and higher lows on the chart, pay attention to the swing points, the one that really stick out like a sore thumb, right? The minor ones, you can just pretty much ignore it, because if you try to pay attention to every single minor highs and lows on the chart, you will get confused, right? And lose the big picture. So for example, let's say you look at this over here. You might look at this, oh, hey, Rayner, the price, broke out of this high, man. This looks like an uptrend. So I know it sounds silly, but sometimes when you get too fixated on trading in the now, you might actually think along those lines. So just remember, pay attention to the major swing points. If you're unsure, look from left to right. Left to right. Don't just look at the last 5-6 candles. Look at a big picture perspective. Bird eyes view, that is important. Okay, so dollar against the Canadian, we can both agree that this is in a downtrend. Moving on, British pound against Canadian dollar. In this case, I'll go to the weekly time frame. Okay, and you can see over here, what is this market condition? And oh yeah, before I continue, dollar against the Canadian, daily time frame. Okay, in this current market structure, what do you want to be doing? Buying or selling? I'm sure you want to look for selling opportunities. That's the path of least resistance. Next one, pound against Canadian. So if you look at this one again, what is this market structure? Well, you can see that this one is a little bit different. It's a bit different from the earlier ones. This market seems to be contained between these highs and these lows. We'll talk more about these exact highs and lows, what is the terminology and how you can use them in your trading later on. But for now, just pay attention that this market is kind of contained in a box, stuck between the highs and the lows. And this is what we call a range market. And in a range market, you can look to buy low and sell high. Buy near this low or sell near this high. But personally, for me, I like to trade trends. Okay, but I still want to share with you what a range market looks like, because hey, some of you might go on to be, pro range traders in future. But for me personally, I simply like to trade trends, buy in uptrend and sell in downtrend. So, but nonetheless, this is what we call a range market. You can look to buy near the lows and sell near the highs. And one couple more examples. You can see this one, British pound against the US dollar. What is this market structure? So again, if you look at this overall seems to be in an uptrend, right? Series of higher highs, higher highs, higher highs, and higher lows. Higher low, higher low, higher low, higher low, and possibly this higher low. So you can see that, this, right, if you are, again, too fixated in the now, you might think that, Rayner, this looks like, a downtrend, man. Look, Rayner, this market has made a lower high and a lower low. This market is in a downtrend. Yes, I get it, right? If you look at just those few candles, right, you can think that it's a downtrend. But let's take a step back and look from left to right. Again, you want to make sure that you are taking a bird eyes view and not just looking at an individual tree and missing the forest. This is a mistake that I don't want you to make. So if you look from left to right, you can see that this market overall is in an uptrend. Okay, so this will be a swing, the next, or rather the swing low that is pretty much still intact. If the market, right, can break below this low and this low over here, then hey, then maybe you can say that this uptrend is getting weak, right? Maybe the trend is starting to reverse. But again, I don't want to take things too far out of hand, because there is where we go into more advanced technical analysis. But for now, looking at the big picture, I would say the pound against the US dollar, looking from left to right, this market is in an uptrend, and I'm looking for buying opportunities. And don't worry, about hey, where to buy, how much to buy, when to buy. We'll cover all that stuff later on. Now just focus on this market structure. And one last final example is euro against the US dollar. So if you look at this market, is it in an uptrend or is it in a range? So you can see that, this chart, I purposely picked this one up because when you deal with technical analysis, there is subjectivity involved. And if you say this is an uptrend, some traders are going to say this in a range. I wouldn't say anyone is right or wrong, because it's kind of like in between. Okay, so personally, I'll say that this market is more towards the range, right? Given this price chart that I'm looking at right now, this will be the lows of the range, and this is the high. Even though this high is just tested one time. Some might argue, no, Rayner, this is an uptrend, no, higher high, higher low. Fine, that's your point of view. So this is why, as a discretionary trader, as a technical trader, there is always someone with an opposing view of yours. So, and one thing to also point out is that if a chart doesn't speak up to you, if a chart, right, makes you feel confused and frustrated and you do not know what to do, remember, you always have the option to stay out of the markets. Move on to something else. No one is pointing a gun at your head and saying, hey, Rayner, put on a damn trick, man. No one is doing that. So if it's not clear, if it's conflicting information, move on onto another currency pair. Does it make sense?